We are in the middle of this year's tax season, and for many, it can be stressful. As you know, April 18th deadline is actually quickly approaching. From collecting the information, finding the time to complete it, and making appointments with your tax advisor, if that's the route you choose, there is so much that goes into tax season. No matter if you have filed your taxes or if you're currently in progress, or even if you haven't even started, this tax season will come and go before you know it. The great part is you can start preparing for next year's tax season today. That's right. You can start it today. After this episode, you will be able to walk away with the things you need to do, and possibly you could end up with more money in your pocket each month. Let's go.
Welcome to the Financial Mirror. Financial Mirror, where future success is reflected in our knowledge of fixing the one thing we can control, ourselves.
Hey, what's going on? Hopefully everyone is having a wonderful, wonderful week. I could not be happier to bring you this episode. Thank you for joining me today on the Financial Mirror as we continue to work on improving the one thing you can control, yourself. If this is your first time joining in, don't forget to hit that subscribe on YouTube to be notified of all the new episodes as they release. If you are listening to this on the podcast platform of your choice, don't forget to like and subscribe to the podcast. If you're on Apple Podcasts or Spotify, that 5-star review and a written comment goes a long, long ways in spreading this information with all the other listeners that are sharing that podcast platform. So on to the episode. We are knee deep in this year's tax season. And let me tell you, that deadline is quickly approaching. I mean, if you haven't started, I did an episode last week, and I'd really encourage everyone to get started if they haven't started already. But you've got to get on submitting those taxes for the 2021 earning period. We're just about a month away, and there's a lot of people. I mean, if you know the average person is probably procrastinating on this like they do most other things in their lives. So don't expect you to be the only person procrastinating. Everyone is probably taking their sweet little time to get this complete. But all in all, you have the opportunity to finish this up, put this behind you, and move forward with this 2022 year. So, want to tell you, it doesn't matter if you have filed or haven't filed. This episode is going to bring value to you, because what we're talking about today is next tax season. And I know it's crazy. We're already talking about next year, and it's not even, we're still in this year's tax season. So, I know it can be tough to wrap your mind around, but it's necessary. This is the actual best time to be discussing next year's tax season. So, 3/4 of Americans are actually going to receive a refund. That means that a quarter are actually going to be owing some kind of taxes or breaking even at the end of the tax year. If you are in that 1/4 and you do owe a tax bill, depending on how much it is, that can be painful, especially if you're not prepared for it, right? So if you're in the 3/4 of the bracket, got it, you're getting a refund. And I've got a segment that's made just for you in this episode if you are getting that refund. So stay tuned. You can absolutely change your outlook and put some more money in your pocket every single month. So if you are actually owing money this year, if you've done your taxes and you see you have a tax bill and you're going to owe money at the end of this year, this could be a wake-up call to even more reason to take action on some of the things I'm going to go over today. Your taxes are ultimately all about your actions. Honestly, it has nothing to do with the IRS being out to get you. I mean, I know so many people think that the IRS is this entity, this body of people that are just, want to take advantage of Americans and all these things, yada, yada, yada. It's really not true. And how do I know this? How do I know that the IRS is not out to get you? Well, If we look at the tax law, 70% of it is all about tax credits and deductions. Why would somebody out to get you fill you with tax credits and deductions when they just want more money? If they're greedy savages, they're not going to give you a ton of tax credits and deductions. There's very little that actually talks about the income tax and the taxes that are owed. The IRS actually wants to increase the amount of deductions and credits that they have available to you, but they do change every year. So keeping up with all of them is probably not what the average person wants to do or has an interest in doing. But ultimately, they are out to help you. They're not out to just take all of your money, but you're in control of it. And that's what I'm going back to say. You're in control of it. And all this episode is about is you taking the actions and the steps needed to be in control of that. I want you to maintain control. I want you to get the most out of your dollars that you're putting in hard-earned hours for. But there's parts of it that you have to do. And that's what I want to cover. That's what I want to go over. And you're going to walk away with this episode today giving you a couple of things to think about, a couple of things to consider so that you can ultimately earn more money in the process. We sort of have the IRS there. They are the tax, the tax, I guess, governing body, if you want to call it that. But ultimately, you just have an obligation to pay your taxes, and there's nothing we can do about it. As much as some people hate taxes, they hate this time of the year. There's that same person whenever they're done, if they do get a refund, they love this time of the year. And I'll tell you one thing, as a previous retail store manager, we love this time of the year because we know that you're going to get all of this cash and you're going to come spend it, and it's a great time for us as well. So we're throwing out all the deals. We want your money so bad, but I'm going to help you today. I really want to bring a little bit more, knowledge your way. I don't want to fill this with information that you can actually use, stuff that you can actually do now to make a difference in next tax season. Whenever next tax season comes around, you will be totally prepared. So we've got that out of the way. Today, here are the things to think about. It's going to help you for next year because right now, starting now, March the 13th is today when this is being recorded live. March the 13th, you have months ahead of you, right? And this is the best time to do these things. Wait until, July, August, September. There's not much. If you did change, would it help you? Yes, but it's not going to help you the same as if you started this today. So without further ado, let's jump in and get this started. So first off, there are new tax rates. Now, tax rates, let me take that back. There's not new tax rates. There's new tax amounts, or the brackets are different. So at first glance, if you're watching this live, you can see it on the screen. This is a tax brackets for earned income for 2021, 2022 compared. If you're looking, you can see all the percentages from 10 to 37%. Those haven't changed year over year. Those haven't changed, from 2021 to 2022. What did change is how much each dollar that you earn, how much of that is taxed at a new rate. So you can see right here for 10%, 10% tax rate in 2021, that was taxed to the first $9,950 of your income. Now it's taxed, 10% is taxed up to the first $20,550 worth of income. So just under $1,000. Actually, more of it is taxed at a lower rate, and that changes as you go up. Long story short, how much you pay per dollar, regardless of what tax bracket you're in, how much you pay per dollar of your taxes, or of your income to taxes, has decreased from 2021 to now 2022. I did calculations and I took sort of an average to try to give you an idea of what that looks like. The average person, not taking into account credits or deductions, the average person's tax bill next year will actually be about $500 less. And that's because of the percentage of your earned income that's taxed at the different rates. And that's just something to keep in mind. Take that with a grain of salt, because yours may be a little bit more or a little bit less than the 500, but your tax bill will be on average about $500 less year over year. So, that's good to look at, right? That's a good thing. But, it's also, there's other parts to this than just your tax bracket. There's so much more that makes up taxes. I am not a tax advisor. I'm not going to sit here and tell you should be deducting this and you should be taking this credit and I'm not going to do that. Okay. What I am going to do is present you with some facts and some things that you can do to influence your tax bill. And that's what I want to really, really focus on today. That's what I really, really want to show you in this episode. But I put this up because so many people, the tax bracket stuff and how it happens and all that, it changes every presidential cycle. It changes. Everyone has their own philosophy of how they're going to bring money into the government, and it's going to change. And after President Biden's, his term is over, if he's reelected, he might change it again. If he's not reelected, the new president is probably going to change it. Like it changes every single time. So it's something to keep in mind, but it's not really the part that I want you to get spun up around. Don't get so spun up around your tax bracket. You should get an idea of what your tax bill is going to be, and that's kind of it. Figure that out, and it's not going to change all that much unless somebody throws out some crazy tax brackets. So look at them every year, get an idea. But next year, here they are. They've already been presented. So go with this. But you should look at them, and that's about as far as you should go. I will do an episode. I think it's important enough to bring up every year that I do plan on doing an episode every single year about any kind of new tax brackets that are out there, because it does, first off, help you prepare for the next tax season. Second off, it does provide some ideas about any kind of major tax credits or deductions that year is, that you should know about in that year to be aware of them. And it does help you get the most out of your income. So keep up with that, but in worst case scenario, watch my tax episode every single year, and you will be on your way to success, guaranteed. So the next thing, so we've looked at the tax rates, we got it. This is the first thing that you can actually do. Like, you can influence this. You've got your number, you got what your income, the tax bracket that you're in. You sort of got what that tax bill is going to look like. Most important part, we've got to validate your withholdings. So many people, when they get started at a new job, right? You fill out this W-4. Your W-4 is going to give you or give the company how much they need to take out of your check every single month for taxes. Most people fill that out blindly. They go down, they fill it out, and they don't really put much thought into it, right? I want to challenge you. Put some extra thought into that. It does mean a lot. So, the good news is your tax bill is going to be less. But that doesn't mean that you're perfectly set up for next year, because there's a couple of things to check out. And the first thing is that W-4. So if you filed it blindly, the great news is your employer probably lets you update these whenever you want. So check with your employer. That is where you're going to update your W-4. You don't need to reach out to the IRS to say, hey, I want to update my W-4. You're going to update that with your employer. Okay. So contact your employer, see what your current withholdings are, and if they don't match, I'm going to show you this. I want to show you this tax withholding estimator. I'm not going to run through it all the way, but I want you to be aware of it so you can take your personal situation and put it through this calculator. In this calculator, I will put a link to it in the description of this video, of this podcast, so that you can go and do this, because this is probably the number one thing that you should do if you are trying to set yourself up for the best chance of your finances being squared away at the end of the year, next tax season. So go look at it, but first check with your employer, get how much, how many withholdings you currently have. What is being currently held out of your check, and update those. If they're not correlating to what that tax withholding estimator gives you, update it. Most employers, like I said, will let you update that whenever you want. So I recommend that people attempt to alter this W-4 whenever any of the following types of things happens: marriage, divorce, birth or adoption of a child, retirement, any kind of new income, any change in your income amount, whether an increase or a decrease in income, if you purchase a home, or if you have now more expenses or more deductions, you should probably go and update your W-4. And I'm telling you, that is the one thing that most people don't ever look at again. And that's the one thing that you control about your taxes. So at the end of the year, when your taxes look one way or the other, it's almost solely because of how much you were having withheld from your check every month. It really doesn't have, it's not the IRS out to get you. And I'm telling you, it's not. We discussed the tax law at the very beginning of this episode. They're not out to get you. So you should be updating on that W-4 whenever any of those life events happen, so that you can adjust and you can make do with what your new amount is. But go through this tax withholding calculator. It tells you before you begin to gather your most recent pay stub for yourself and for your spouse if you're married. Gather information from all the different sources of income that you have, and have your most recent income tax return handy. So if you have just completed your tax return, you can just utilize it. If you have not, you can go ahead and process this year's tax return, and since it's due in a month, and then change these withholdings, run this through the estimator. But what this is doing is ultimately just giving you how much you should have withheld from your check annually, or during each pay period, but overall annually. But the goal of the withholdings is not to have to pay at the end of the year, but is also not to have a huge refund. So it's like, I know it sounds crazy, but if you feel like you're living paycheck to paycheck, how would you like to know that you actually can have less money come out of your check by adjusting these withholdings and have more money in your pocket every month? How does that, that sounds great, right? If you're living paycheck to paycheck, me telling you you're going to have a little bit extra money every month is probably a great feeling. So I want to say this: if you get a huge refund every year, if you will decrease your withholdings, it will lower your tax refund, but it will give you more money each month of the year. Does that make sense? If you're going to decrease your overall refund, you're not going to get $4,000 at the end of the year, but every month you might have an extra $200 a month, right? Like that's sort of the trade-off. But that's what you want. Decreasing your withholdings will do that. And so that's what I wanted to end on this with. This is a total balancing match. You've got to figure out year to year, if you got a huge refund, go back to your W-4, decrease your withholdings. If the next year you still got a big refund, go back to your W-4, decrease your withholdings. And you just inch it down. You just inch it down year after year until you get to that happy median where you're not paying a ton, or you're not paying any, you're breaking even, or you're getting a very small refund every year. And that's kind of the break even. That's kind of where you want to be. And I'm going to show you why later. The next thing, I want to tell you a couple of major changes to be aware of. None of these are, crazy. They're not going to be mind blowing. They're not going to change your life, but a couple of credits and deductions I want you to be aware of for this upcoming tax season. First off, one of the biggest changes is the child tax credit. If you have children, this applies to you, but the child tax credit was $3,000 for children ages 6 to 17 and $3,600 for children 5 and younger. In the upcoming year, that will drop back. That was changed due to COVID. That will drop back to a pre-pandemic level of $2,000 per child. Age is irrelevant. So if you were in the past 2 years, you notice you got a ginormous refund, but in times past you really didn't. Well, maybe keeping your withholdings, kind of steady right now might be a good option, because you will be dropping how much you're getting as a tax credit for your children. Just to bring everyone up to speed, A credit is going to decrease your amount of income that is taxed. Your any kind of deductions, if something is labeled as a deduction, that's only going to help you if you're itemizing your deductions. Otherwise, if you're just taking a standard deduction, you don't get a standard deduction plus those. You do get a standard deduction plus credits, but you don't get a standard deduction plus more deductions. Okay, so we got that out of the way. That's sort of going to play into one of these next parts. But the tax credit's huge. That's going to be people are going to notice a huge difference in the upcoming tax season because of the child credits alone. Another big change is the standard deduction. So that will change to account for the current inflation. Married couples will get $25,900 as a standard deduction. That's up from $25,100, so $800 more dollars as a standard deduction. Singles will get $12,950 instead of $12,550, so it's up $400. So you can see it's just $400 a person. $800 for the married, $400 for the single. Since 2020, there was President Trump enacted this $300 deduction for charitable donations that could be added. It was almost like a credit. It could be added with your standard deduction. Well, that's going away. So for 2022, that charitable donation will be going away unless you're itemizing your deductions. So that's kind of a big deal because that was almost a freebie for $300 off of your income. Because most people, donate to a church or some kind of charity or something like that for $300. So it was kind of a freebie, but if this year, unless you itemize, you're not going to be able to get that. And then finally, the last major change I want you to be aware of. So I hit the child tax credit, I hit the standard deduction increasing, and I hit the doing away of that charitable donations. The last thing is your 401k, 403b, and 457 plans, which are just your sort of employer provided retirement plans. They will now allow $20,500 is the contribution limit now. That's up $1,000 from the $19,500 in previous years. So that's awesome. If you were maxing out that at $19,500 previously, now you can go up to $20,500. So that's another big change that's in the works, and you should be aware of that. So I'm gonna highlight something, and this is really what I wanted this episode to be solely almost around. So I hit those tax credits, and I told you understanding your tax bill is great. You can always go and do a actual, wish I would have had that pulled up. So I'm just Googling calculate your tax bill. Just put that into Google. I'll see what comes up right here. But here we go. Federal Income Tax Calculator for NerdWallet. That's the one we're going to. But you can always figure out what your tax bill is, right? So you just go through here. You can put in what you're, single. I'm going to put $50,000 for easiness. We'll put 30 as my age, no dependents, no contributions, no IRA, none withheld. This will give me what my actual amount is. So I'm going to owe about $4,250 or $4,295 is what this is telling me, taking a standard deduction. So that's sort of how you can just pull up a calculator and see exactly what your tax bill is going to be, and then you can estimate it off of that. And then you can see along the way, looking at your pay stub, how close you are to hitting that tax bill. But what I wanted to talk about, and this was how I really wanted to wrap this episode up, and I really wanted to ensure that everyone sort of got a grasp around this. You pay if you get a huge refund at the end of the year. I found an article on it, but if you get a huge refund at the end of the year as a tax refund, I want you to know that is a interest-free loan to the government. That's not the government giving you free money, right? That's not a stimulus check that, which was actually the government giving you free money. Well, it was somebody's tax money, but it was to you, it was free money. If you get a huge tax refund, that is your money. It is just the government saying, you've paid too much, here's your money back, right? That is what that is. So this article, tax refunds, your interest-free loan to the government. This is really where I wanted to wrap this up, and I wanted you to understand this concept, because I think the more people that we can get their heads wrapped around this one simple principle, the better. Adjusting those withholdings to where you're not getting a refund is hugely beneficial to you as an individual, and I'm going to show you why. So if I go, this is straight off the IRS's website. If I go and let's say that I get a $1,200 refund, right? Just for easy monthly contributions, I put an extra $100 a month, which is just 1,200 divided by 12, and I do that for a whole year. What that's going to give me is, instead of a $1,200 refund, it's going to give me a $1,218 amount, right? And that changes. If you did, let's say we do, let's pull up a calculator. How about what's the average refund? I wonder what that, I'm going to go with 4,000. Let's say the average refund is $4,000, and I'm going down to the penny right here. So if the average refund is $4,000, we're going to divide that by 12. We're going to have $333.33 every month put into that account, right? I don't know if it'll do decimals, but we're going with it. So instead of getting a $4,000 refund, you're going to get a $4,060 refund. Does that make sense? Like that's how much, and this is with an average of 3% return on your money, which is fairly low, honestly. If you put this into an index fund that was pulling out a 7% return, it's really more like, instead of a $4,000 refund, it's a $4,142 refund. But that's sort of what I wanted you to understand. I wanted you to understand that this money is not free. This money is being given to you, but is your money. It's just being returned to you, more or less. And I want you to understand that, for the simple fact that if you can change your withholdings, which is how you control this, if you can decrease your withholdings and you can keep more of your money, yes, you won't have a big payday at the end of the year, but most people waste that money anyways. When they need it is every single month, when they're trying to pay down that debt, when they're trying to pay off that house, when they're trying to save for their kids' college, when they're trying to do all these things, all these financial goals. Every single month that they're giving their money back, too much to the government, giving them this interest-free loan, that could be going toward their kids' college. That could be going toward their wealth building. That could be going toward that debt. That's your money. Don't give it away to the government and get nothing for it, right? They're just giving you back dollar for dollar. You paid $300 too much. Here's your $300 back, and it's been sitting there for 12 months, right? Sometimes more. I talked last month about people that are still waiting on their money back from last year's tax returns. There's millions of people waiting to get their money back. And that's mind-blowing to me. That's truly mind-blowing. So if you can adjust that and you can update those withholdings and get an accurate number that says this is how much I'm going to have withheld, that's where you want to be at, right? That's where you truly want to be at. And when you can finagle it and you can get it perfectly down to where you're barely paying or you're barely receiving a refund or you're just breaking even every year, you have found that perfect equation towards making the most out of your money. Okay. Now that's I know that's a lot, and what I'm here to tell you is that it does take years to get this right. But this next year is your chance to start. Figure out where you're at. Take this year's tax return and adjust it. If you got a huge refund, go adjust those withholdings. Make sure have them taken less out. But it's ultimately about figuring out where you're at. So use that IRS tax withholding calculator. If you do get a lot of credits, outside of the standard deduction, maybe you lessen those withholdings. If you don't really have that many credits, maybe you maintain this year, you do exactly what the IRS withholding calculator says, and then if you do get a huge refund, go adjust it. But make those adjustments. Don't continue to give your money to the government tax-free or interest-free. Don't continue to do it. It's your money. Make the most out of it. So if there is anything that if there's one thing I could leave you with, it is that update those withholdings and don't have them take out more than needed. So the other thing that I want to throw in there real quick is you also have state income tax. I did not cover anything state income tax related. I would have 50 episodes on 50 different states' income tax laws. So go take a look at your state and figure out where your state lies. Every single state's different. Some have no income tax, some do. So just go figure out where your state is. But ultimately, I hope that you took something away from this, and I hope that you grasp some of those key concepts that I went over, because I do think that this is the one spot that people can start to take control of their finances and begin to earn more, take home more of their money that they're working so hard to get. If you are ready to take control of your finances, or maybe you want someone to sit down and walk you through this calculator, or maybe you want someone to sit down and see how your withholdings are currently lining up, or just help you now that you have the extra money and you're ready to pay down that debt, you're ready to pay off that house or put that money in the kids' college fund and make sure you're on track. Go over to thefinancialmirror.org and hit book now. Schedule your free consultation with me, and I will walk you through seeing if a financial coach is the right bet for you. If we decide that's the right thing for you to be on your journey, we'll get you signed up, and we will be on your way to helping you get to reach all of those financial goals that you have in your life. Finally, if you do want to give an extra dose of support to the stream, go to my merch page at thefinancialmirror.org/shop and pick up some awesome financial mirror gear. There's all kinds of things. There's shirts, there's cups, there's mugs, there's everything. So go check it out. I truly appreciate everyone tuning in. Don't forget to subscribe, like, comment, and share with everyone in your life. If you are listening to this on the podcast, thank you. Don't forget to subscribe. Leave the 5-star review and a written comment. Those truly go a long ways. Till next week, continue improving the one thing you can control, yourself. Peace.
Well, that wraps up today's Financial Mirror. Join us next week as we continue to work on ourselves, change our mentality, and to commit to achieving the success we always envisioned. Regardless of your platform, help us grow as a community. Please like, subscribe, and share with the people in your lives.